3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Welcome, Forex friends and followers and members. Free trade, the entire market is pushing against. It's common for the market to be smooth for a week, 2 weeks, 3 weeks, and then what the banks do is they all get on a Zoom call and they're like, let's push the shit out of it. Let's just dump all of our money. Hey, who's got CADCHF to trade is what they say. And a couple banks raise their hand. All right, we're going to go all in tomorrow morning at 3:33 a.m. Set your algorithm. We're going to dump our money. And that's what they do, right? Like the unpredictable trade that we're in right now. And they pop up all year long. Absolutely unpredictable, no reason. In fact, one of the things I want to do, we'll do it, is go look at what the average pip movement is on CADCHF. So I'm going to spend a lot of time, or a good amount of time, talking about the AutoHedge function that is currently in beta testing. And I'm changing the settings like daily because my brain wants it to be perfect, but it's not perfect. None of this is perfect. We'll get into that. Let's just kind of stare at the free trade here. Let's go to the chart. If we were doing auto hedge on this trade, which eventually I envision putting auto hedge on the entire system, and then it just gets copied out to any trade, any feed that any trade that's coming from the main feed. So interestingly enough, we are in 1, 2, 3, 4, 5 trades. Okay. Now CADCHF, just like CADCHF, CAD Swiss that we're also in, these are not naturally big movers. They're just not. So you'll notice that even though it goes deeper against, we scale into the trade, it doesn't bring the take profit down very much. Because it knows there's a snapback. It will drive the take profit lower if this is the kind of pair that moves a lot and it's not going to snap back that much. But right now, the algorithm is making the assumption based off of CADCHF price action in the last 12 months. It's saying, hey, yeah, it's going to snap back to this area. So it is what it is normally. And we can kind of, I'll start getting into the hedge concept here. Normally, we would, yesterday I had, listen, guys, that I'm going to drive you fucking crazy with all the settings. You got to play with this stuff. So yesterday I had the, and I'll show you the account, I had the auto hedge set at trade 5 on every currency pair. I'm trading every currency pair, all 22 in the full algorithm, and I have the auto hedge function put on it because I need to see it. I need to see it playing out in real time across the board on all pairs, not just one, right? Right. Mark says, who would have thought CADCHF? You wouldn't. And that's the game that's afoot. There's no way to know. There's no way to know. That's why we have to have some protections in place. So we would have hedged on this trade right here. Okay. And here was my original hedge thinking. When the hedge gets placed, it will also place a stop loss on the hedge. This is a buy. So there would have been a sell. There'd be a stop loss above. Okay. What I'm seeing happening pretty much across the board that has to be dealt with, and is also, there's a huge caveat to all of this. The more I'm seeing it, I'm like, well, what's the reality? So I'm going to tell you what that reality is, what I believe it is at this point in my testing, programming, understanding. I could put the auto hedge on the entire algorithm today. It works from a programming standpoint. Here's what happens. You probably can't see this. Let's see if I can zoom in a little bit. You probably can't see this. So let's say the hedge was placed down here, and that this is the, and here is the stop loss. What's happening, you probably can't see it on the screen, but there's a wick on this candle up and down. The entire intent, because all of this price action is automated through the banks. It's all automated. They have a robot going, okay, take the next candle, take out the top, take out the bottom, go sideways in the middle, right? So what they're doing, because people run tight stop losses. They run tight stop losses. It's natural to want to run a tight stop loss. We don't run a stop loss. We're going to start running a stop loss because we have to with the hedge. We don't want to leave the hedge wide open. Now, there's part of me that's like, well, leave it wide open and we'll let it play out like it's going to play out, right? Leaving, and maybe that's the final iteration, but leaving the stop wide open, leaving the hedge wide open, no stop. The magic there and the danger, both at the same time, was I'm noticing that the hedges are getting taken out. So take a look. Let's say this line right here is a hedge trade. Okay. You can see we're in buy trade, so the hedge would be a sell. Okay. Look at the price action. It pushed down, and then, so what would have happened is, if our stop loss was up here, it would have dragged the stop loss down to about where the entry was. The next candle, they wick up, take out your fucking stop loss, move down. Okay. Another entry. All right. So you'd get another hedge. So this hedge is gone. So look at this price action. Pushes down, and you might still have this hedge in play, but there's a heck of a wick right here. It would have taken out the next hedge, and it would have taken out the next hedge. So you end up having what? One hedge open in 5 trades. There is some protection there. Absolutely. But the price action is taking out the hedge. What's the solution in my mind? Here's what I do. I set a bigger stop loss. I take a bigger risk. And that prevents me from getting taken out of the hedge. And then I do what's called a trailing step stop. That means at some point, if there's a hedge here and a stop up here, as this price action pushes down, this trailing stop moves down a little bit, moves down a little bit, moves down a little bit. So you get this huge amount of area that gives the price room to breathe. And then eventually, because this pushed down so far, even if it wicks back and wicks up and down, but here's the danger in that. You go ahead and do a hedge here and set your stop up here and the price turns around. You are potentially, and you got to be mentally ready for this, at a loss on that trade. Because the price action didn't match up with the protection that you have to have in place. If we are going to try to protect our accounts with AutoHedge, we also have to be ready to take some losses. The big pushes, like CADCHF right now, will make up for that. Here's what I'm thinking. It's a great concept, but from a marketing / customer standpoint, you guys are going to freak the fuck out because you're brand new. You're like, Terry, thought this was a no-loss trade. 3 days in, you're at a loss. The goal, and this system will end in a net profit, but moving to an auto hedge system, you're going to have to start looking at your profit and loss statement in a 30-day period. Not day to day like we do now. Because we look at it now and it's just nothing but net profit. We're not closing anything until we get to net profit. we're going to have to run some hedges that can potentially take a loss, that would show a loss in a basket of trades because of the price action, because it just didn't work out. But there's a happy medium somewhere. There's an average somewhere in there. I can envision, if you look at it on a running basis, like a couple days, probably not going to make you very happy. You might have a running loss of $300. But when the overall system closes out 2 days later, you'll be up 900. Okay? So you're not going to be able to look at it on a daily basis. And it's something that I just believe we have to do. I mean, look at CADCHF. Some people are down below 1,000% margin level right now. I'm not, but you guys like to overbid. I get it. It's tough not to. You want to make an ass ton of money all at once. But in the future, when I have the auto hedge, I envision, I don't know if I'll separate it. You know, maybe I will. But I'm like, if I'm going to put it on the algo, we're just going to run this thing. And you're going to have to suck it up and accept a loss here and there that ends in a net profit later down the line. Because, I'll give you an example. You might have a net loss on an entire basket of trades. 2, 3, 4 trades, whatever. That thing turned into a net loss. That's done. It's closed. But you're looking at the next one, like CADCHF, which if you could hold on to your hedges and the price action didn't take you out, you'd be doing pretty well. I will tell you this. Out of the 10 hedges that would have appeared on the current CADCHF, and we'll go look at the account here, only 2 remain. That is the reality of setting a tight stop loss, setting the price to break even. Is this account still protected? It is. Stand by. I'm going to pull it up here. Here it is. And again, this is a test account. Don't freak the fuck out. Don't lose your shit. So it's a $10,000 account trading all of the currency pairs from the entire algorithm. And I had set it to take an auto hedge at trade 5. I've recently did some updates. I'm like, 5's a little bit late. Let's do it at 3. So right now I'm auto hedging at trade 3. And I'm doing a 2x lot size. 2 times. There's some reasoning behind that. And also what I'm doing is I'm setting a large stop loss. I'll give you some general numbers right now. I'm setting a stop loss at 25 pips. At 20 pips, the stop loss starts trailing the price every 10 pips. Am I saying that right? Let's see, 10 points. No, sorry, every pip. So at some point, the stop loss at 25 pip stop loss, at 20 pips, it moves the stop loss down closer to the price action. In this case, we're acting as if it's a sell, so I can give you a visual. And then every pip that it moves down, it drags that. It's a trailing stop loss. So if we get some good price action, here's the danger in that. Set the stop loss. Trade comes all the way back, hits the stop loss at a 2x lot size. You're going to take a loss there. You have to. It's a balance. You got to take a loss on one to make a massive profit on the other. That's how it's going to play out. That is how it's going to play out. Mark says, could the stop loss be set at the equivalent of 2 trades and then do like a trailing stop at that distance? That's essentially what it's doing by what I just told you. Problem with that, problem with this linear, this is how it's going to work. Every pair is different. Every pair moves at a different volume. Could I ultimately set a trailing stop auto hedge unique to every pair? Yeah, it would take an entire server's worth of resources to do that. And right now I'm running about 13 accounts on one server. Mark says, I think profit and loss has to be viewed weekly at a minimum. This CADCHF has been running for over a week. Yeah. No, you got to, honestly, I'm like, no, you got to look at it over the month. If we're trading, your profit and loss, if you want protection, if you want to bid more and you don't want to worry about if you want to trade the entire algorithm, look at what I'm doing. I'm trading the entire algorithm right now. In fact, I can show you some specific trades. I'm trading the entire algorithm. For the day, it has had to force some losses because you can see hedge got taken out right there. CADCHF hedge taken out. Another one here, CADCHF hedge taken out, taken out. Okay? That's the price action that I'm like, all right, you mother. Because that's what they do. Push down, wick back up, take you the fuck out, and then keep pushing down. And you just have to know that. You got to be ready for it. It's got to be programmed to handle that. I've just done that. How much is that wick that will take you out? There's a happy medium somewhere in there. And I'm just going to keep playing with the settings till I get it. I'm looking here. This is probably, that is not a hedge that was taken out. So really you can see that it has had to have some sacrifices. Just looking at something here. You can see an auto hedge taken out, auto hedge taken out. Okay. Now, why is it taking it out at a higher than break even? It's the price action. You get a candle that forms, okay, the main price action, and let's say the price is moving down, right? What you then get is a push up in a wick, a push down in a wick, and that is the bank's robot algorithm going, fuck you, fuck you, fuck you, fuck you, right? Take them out, and then you get the next candle that moves way the hell down. Take them out with a wick. It's designed against you. So that's why we use an algorithm. I am pretty comfortable with taking some losses over here, taking a day of losses, because I can see that my wider gap stop loss on a hedge trade is effective and not getting taken out. Think about this. If you look at CADCHF right now, let's look at the actual basket of trades here. So I've got 1, 2, 3, 4, 5, and then the sixth, and this is probably not the sixth, but the fifth trade went with the hedge, got taken out because of price action. We've got one trade, one hedge here, okay? We've got another hedge here and another hedge here. What's interesting is you can see which ones got taken out. So the hedge for this one got taken out, and there's the hedge for that one, there's the hedge for that one. So, you know, it's getting taken out. And one of the things that I did is you can see that I'm hedging equally. I stopped doing that and I started doing a 2.0. So the hedges that hang on, that don't get taken out, are at a more significant lot size. On a trade that immediately turns around on the first hedge, you're going to take some losses. It's going to happen. Not massive losses, not account killing losses, a loss. You're going to do that. You got to play the game. That's all I can say. It's a million different ways to say it. So it's providing some protection. Remember, I'm trading the entire algorithm. All the currency pairs are very smooth right now. CADCHF going ape shit. Let's go look at it on the chart. Just absolutely pushed down. This is the hour chart. I mean, just huge propulsion candles. And then look what's happening down at the bottom. Wick up, wick up, wick down, wick down. They're just trying to take people out. That's all they're trying to do. Because guess what most people do? They see this downward action and they go buy down here with a really tight stop loss. Take them out, take them out, take them out. That's what they do. Now, let's zoom out to like the day chart here. I mean, look at this. We are actually, you are only seeing a limited number of the CADCHF. We got into it somewhere up here. So we've got all kinds of other trades up here from the main algorithm. I just jumped in to the middle of what's going on here. Extremely unpredictable. I'm going to make the assumption if I scroll over, if you look at where all the price action is from the most recent bottom, I believe we're at the bottom. Doesn't mean we are. It looks like it is the bottom. If you scroll over here, you can see we are, this is where all of the price action has happened in the last month and year. There is a section over here that I saw that has this massive wick down. It takes a lot of money for them to do that. They might be burnout at this point. We don't know. But it really feels to me like we're at the bottom of CADCHF. So I knew that auto-hedging our algorithm was not going to be perfect. What I was worried about for new people, people that don't really understand, people that might look at it all on a daily basis, go, oh, why didn't I take an $80 loss? Because you're going to get a $1,200 profit coming up here pretty soon. Can we look at it? Can we look at it at the end of the month? And here's the tough thing. I may have to trade on my own and test this and get to the end of the month and be at break even. All right. I'm maybe too aggressive on my stop loss for the hedge, right? Mark says, I almost feel like this should not be available to brand new members with the no loss marketing, maybe for subscribers only. You know, I hear what you're saying. I'm not gonna give a shit. I'm not gonna be emotional about what people think. I'm gonna go, that's what you're gonna think. I knew that's what you're gonna think. Suck it up, right? Because I know that this is ultimately better for them than not, right? A true trader that will come in and understand the power of our system and understand the power of auto hedging. Potentially, I'll have a raw feed and an auto hedged feed. That's probably what it will be. And what will everybody do? Eventually just come over to the auto hedge feed and go, okay, I get it. We're trading. Taking a loss, I hate to say the word loss because, this is not, even if you take a loss at any given moment, it's not a loss. You got to, look at it over 12 months, but look at it over 30 days. This is going to end. It will always end because the algorithm always ends in a net profit. You're not going to get all of these horrible shit price action that takes out everything all the time. There's a net profit in the end. Being afforded the protection of a runaway trade like this, which we get all the freaking time, and you cannot see them coming, you do not know which pair it's on. You do not. You do not. You never will. Absolutely never will. So you just put the protection in place. There's a level of this that I can kind of play like a piano on my end. I can just I could, if I wanted to look at the entire algorithm and start putting the hedge on individual pairs, things that run away. That could be an option. Just drop the module on that pair. All right, guys, we're in auto hedge mode on CADCHF. That might be the final iteration of this. And you just have to kind of be prepared for that. And if you don't want any auto hedge stuff on any pairs, then you trade the regular algo. Mark says the last low was an all-time low. I think you talk about that one with the huge wick. Yeah. So I'm not too worried about this. Certainly not hitting any of my counts. Why? I trade conservatively, guys. I just do. I trade hyper conservatively. If you looked at any of my accounts that this is on, we can look at one. Stand by. Pull something up here. This one, I'm just going to show you the margin level percent. I'm only trading CADCHF. This is a pretty big account. This is one of my accounts. I'm at a 7,000% margin level with this CADCHF. I'm sleeping all night long. I don't even need to hedge this. You see what I mean? So a lot of it is just your own desire to overbid all the time, to make more than maybe you probably can extract out of the market at any given time. But you got to admit, this margin level percent on my account, it's great. And I'm not bidding, I'm bidding a base lot size of 0.10. That's not bad at all. In fact, I pulled it back on this account. No hedges, as you can see. Everything's fine. I mean, this thing could push double what it is and it wouldn't affect my account. So I urge you to trade that way. But I know it's hard to get out of the, I want to make $1 million from every trade. Let's pause here. We will go look at what is gold doing. We're still in the exact same pair on the 10 pip hybrid feed. Same group, I should say. Here is closure overnight of gold. This is for me on my account. I took the gold trade. I took it at a 20x, 20 times 10 cents. Base lot size of 0.20. You take it at whatever amount you want. I've made $261.47 today. I'm happy with that. Very happy with that. So, is this a large account? Yes, it is. So trade it at the level that you can just be comfortable with. Simple as that. So I'm doing just a ton of thinking about this auto hedge. And so many different ways to approach it. I will tell you this. Even as I describe it to you guys, I have 17 more ideas. Take the movement. Let's see if we can pull it up on the chart here. The movement of CADCHF here, where you're essentially doing a buy somewhere up here, and then you got all these buy trades on the way down. If you look at the sideways movement we had right here, little hard to be in a hedge there and not get taken out and not think that it's going to turn around on you when it didn't. So it's a tough game. That's why the algorithm would need to hedge on as many trades as it can. And you have to make that sacrifice by setting a large stop to begin with. And if it did turn around right here and take your stop out on the hedge, which is now higher than your original entry that it's equal and opposite to, it could end up break even. It could end up at a small loss. You're going to have to be okay with that. That trade didn't work out. But in our particular case here, if you can be hedged somewhere up here, have the rest of the hedges taken out, and maybe have a couple more hedges down here, that offers you a lot more protection than you would have had, and it's all auto protection. You can't protect every trade. I wish you could. Sorry, I was looking at a message there. I'm going to keep moving forward. I'm really close. I just messed with the trailing stop today. Probably changed the trailing stop settings 5 times already this morning, watching it on some pairs. If we can go back, let's go back to the account real quick. The AutoHedge account. Might be able to see what's going on in some of these other pairs. If you look at this, let's see, AUD-CHF is probably a good example because we just went main trades 1, 2, 3, 4, 5, 6. Okay. So what's interesting there is you can see this is hedge number 1 and this is hedge number 2. So down at the bottom there, we got some hedge, we got some protection. It is protecting our margin level percent. It's doing what it should do. If you look at it on the chart, I don't know if it's going to be able to be very visual. Let's see here. I'm going to have to zoom in. Probably not going to be able to see this. So let's see. All of these buy trades, my TP is still up at the top here. I've got a stop loss here for a hedge. I've got a stop loss here for a hedge. And what's interesting, and here's the danger of this. It hasn't pushed enough. Maybe this is a short little pullback and it's going to keep going. But it hasn't pushed enough to pull these hedge stop losses down. So if this turns around right now, on the way to take profit, which is up here, it's going to take a loss on this hedge and a loss on this hedge. Probably going to be a break-even trade. That's the level of positive and negative that you're just going to have to get used to if you're going to auto hedge. Simple as that. I want to set this thing so we can end in a net profit in a 30-day period. That's the whole point. One thing to remember, when we do get a trade like CADCHF that pushes 20-something deep or something, maybe more, that's where the big money will be made. If we can hold onto those hedges up above, if we could get it to push so far that the take profit comes down here below our hedges, these will end in a massive profit. The trade will end in a net profit. The hedges will end in a massive profit. So at that point, you're like, wow, I want this to happen. It happens enough to where over a 30-day period, you literally could take $1,000 loss in a 30-day period. I'm just being random here. And a $5,000 profit. Okay. But you're going to shit yourself when you see the loss because you're going to get the loss first. The loss is going to happen before the net profit ends. So we will see. We will see. I'll tell you what. I wish I had auto hedge function playing out this past summer when we had just random pair after random pair push 20, 30, 40 deep. We're like, what is going on? People took some losses. And if we can have some protection in place, maybe here's a final iteration, final thought for you guys that have experienced this. I would rather take a loss that I can break even on eventually or make up for than lose my entire account. And that's truly the reality of it. Let's say you have a 10K account. Because of bad price action at the end of the month, let's say you have a $9,500 account. You took a $500 loss. You've taken some losses. It built back $9,500. You might not like that. The other option was to have a $97 account at the end of the month because the broker, you pushed too far. So it's the reality of it. Maybe I could do that. I could go, hey guys, feeling bad about taking some losses on auto hedge? Let me show you a sample account that doesn't have that on it. You would have lost it all. So I just, I want to trade conservative enough. Everybody in this group pushes their trades right to the fucking limit. They do. Look at my margin level percent on that one trade. 7,000. I'll turn the computer off and go back to sleep all day. That doesn't bother me. But everybody is trading more than they should. They're not looking at the big picture, which is, what's the big picture for me? Pull out some conservative profits on a weekly, bi-weekly basis and hold them in Bitcoin. And Bitcoin is and will go through the roof. And in 5 to 7 years, you'll have your nest egg. Your millions of dollars. You will. Or you won't, because you won't even try it or do it. But that's the premise behind this. Trying to trade this Forex market and pull out massive profits on a daily, weekly basis, you will lose it all. But if you can be conservative and back up, we have a really good algorithm. The algorithm is great by itself, just being conservative. But adding in this auto hedge is going to give, I'm going to say it's going to give you about a 33% extra protection than you would normally have. So it's a balance between trading conservatively and having the protection. So maybe it's not increasing your bid exponentially. If you're normally bidding $1 per pip, maybe you could bid $1.30. Maybe you could bid $1.50. So Mark says, I still love the concept. Yeah, I'm not talking negatively about it. I want to be transparent and put it in perspective. I love it. It's the best thing. It's the best thing I've come up with. There's no doubt. But I'm just trying to put in perspective. I mean, hell, maybe in a week I'll go, all right, I got it. Because I'm thinking about this and watching it and restructuring and watching it and restructuring. On a base level, I mean, the programming works. Now it's just like, what do I want that stop to do on my hedge? I mean, there's another option. You ready for this one? Yeah, now you got to be a trader, okay? Just take the trade as a hedge. Don't set a stop. Manually manage it. I like that. Let's say you did that. I kind of like that idea. But you can't stay up all night and watch shit. You'd wake up in the morning, you'd take a look at your account, and you'd go, all right, everything is hedged. Nothing has a stop on it. These hedges are negative. Looks like it's turning around. Okay, go ahead and get out of them right now. Take the loss. Let that trade play out. So that may be the end iteration also of just doing a hedge, and none of them have stops, and you can make that choice. You might wake up in the morning and look at your trade and go, wow, all I have left open on this particular currency pair is 3 hedges, and they're all in the blue. Okay, click, click, click. I'll take that profit too, because the main trade closed out. It's possible. So it's just learning and watching and experiencing and thinking it through, moving forward, and that's exactly what I'm doing with this auto hedge stuff. I could put it on any pair right now. Unfortunately, I would have put it on CADCHF, but it's happening right in the middle of my freaking testing. So I see you guys have been doing some manual hedges. Good, smart. I truly think we're at the bottom, and it's going to start moving back. However, here we are. We've held it, 2 weeks. It's a slow pair. Pause one time. That's what I wanted to go look at. Let me pull this up. I just wanted to look at what the standard movement is on CADCHF. Take me 2 seconds here. I'll share this with you. So I'm at MATAF. Let's look at Forex volatility. The standard is 10 weeks up here. I'm going to do it. I'm going to do 4 weeks. I'm going to do 4 weeks. There we go. Refreshing. Stand by. We're going to see what this is. No, I am not a robot. Or am I? Let me sort the data by pips. Lowest to high. Yeah, look at that. CADCHF, 41 pips. Average movement. If I were to go measure what it's moved, I think I looked. I'm going to pause you because I can measure this on my server. Stand by. Let me just tell you what it has moved. I believe it's this. Stand by. I'm going to measure this for you. Zooming out. Let's see here. I'm on the hour chart. I have to go to the 4-hour chart. Yeah, let me tell you what it's moved. It has moved 208 pips. A 40 pip, and we see this all the time, a 40 pip pair. Let's come back here. Just moved 208 pips. Unpredictable. Insane. It's literally the third slowest pair in the world. I don't know what to tell you. It's pure insanity. It just moved as much as at least Euro AUD doing 100 pips a day. So just reading here. Yeah. Great insanity. It is what it is. I'm going to do my best to afford some protection. But we got to play the market. And I know for a fact, no matter what level of auto hedge function I put on this, I'm also going to have to manually intervene because there's no automation that can make that human decision all the time. So I think that is probably the case. It will be the full algorithm without hedge, the full algorithm with hedge. And you as a subscriber member will get to choose what you want. The challenge at that point means now every feed we have 10 pip hybrid, full feed or hedge. One profitable pair feed, full feed or hedge. That might make it more difficult. Maybe, as I think about it out loud, it's just the hedge is happening and my goal and my drive is towards a net profit for everybody. So that's it. Happy Friday, December 6th. The week just flew by. I'm going to continue to test this moving forward. One thing we did not look at, and I probably can pull it up here. I just don't have the account number on the top of my head. I think it's this one. It's not that one. Stand by. I'm looking at the double your account. I know this new stable feed, sideways. There's no movement on Euro GBP. But it'll happen. You got to look at the stable feed over a 30-day period. It does really well over 30 days. So stand by. What I'm looking for is the double your account in one trade feed. And because it's a brand new feed, I have not memorized the account number. Okay. Hold on a second. I need to go look at it. Because I don't know what the account number is. Let's see. Double your account in one trade is this one. And it is, I got it. Let me come back. Here it is. So here's the reality of it. The the system itself continues to try to trade and go into an aggressive trade with a 5% loss. And I started on a $3,000 account. We're down at $2,400. It's going to keep trying. It's going to keep trying. This is high risk, high stakes. This is like going to the casino and going to the high limit room. That's what this is. The goal, the mathematics, the idea behind this is to double it enough to where you don't mind losing one here and there. That's actually reality Forex trading. Take a $3,000, lose it. $3,000, double it. 3,000, double it. 3,000, double it. 3,000, lose it. Well, you're just up three doubles, so you're good. You got to look at it over time, not one. Someone asked me if they could put the double your account in one trade feed on $1,500, even though it requires $3,000. I'm like, no. I want you to go to the casino with me because you sound like a lot of fucking fun. I like that, but that's a little bit deep on the risk. History-wise, you can see it did 2 entries last night, and the price action did not work out. It's going to work out. This is on the most volatile, highest pip movement per day pair, GBP JPY, nearly 200 pips a day. I'm only asking for a 120 pip move, but here we go. Price action. Pushes, takes you out. Pushes, takes you out. In fact, if you go look at these entries, they probably had an entry. You can see it did a sell and a buy different times, right? Because of the crazy, it would push and then completely reverse. Push and then completely reverse. We just have to keep playing the game. This is, again, you going to the casino, going to the high limit room, playing big. We're playing big here. We're asking for a lot. We're asking to double our account in one trade. The math works out. Will the price action work out? I don't know. Well, I'm going to keep doing this moving forward, and I will know, well, you're winning 2 out of 3 times. You're winning 4 out of 5 times. You're winning 3 out of 5 times. That's how it's going to be. We don't know what the odds are here. Depends on what the market delivers us. So that's it. Happy Friday. I'm done with what I have to say. Come on over to the group, fxwithterry.com. Get in the free Discord group. Start taking the free trades. Start subscribing. Start using this stuff. I'm putting my entire life into it. All of my money is at risk on the trades and the system you're using. And maybe I could get you to be a little more conservative and start holding your money in Bitcoin. But hey, that's me. I'm just a degenerate gambler. Don't pay any attention to me. I'll see you guys in the next live session.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.